I'm here. Just had to get me a bacon sandwich. Bacon sandwich in typical Canadian fashion. Maple bacon. Yeah, do need some egg, but bacon's the most important part. So I always, when I start, I always just check. I pull the chart back. I just see where we're at. However far back I can see when I squeeze it all the way like this at the bottom. That's what I do. So I'll look and I'll see. What I'll notice is it's come down. It's had a big run up. Okay. And now it's kind of made a couple tops and bottoms. And that's what I'll look at. If it clears this bottom here with a speed tick and stuff, I'll look it for a trade. Same here. And that's the analysis. These four should be pretty close to the same. Same thing, run up, a couple of tops. So, overall we're up on the day since 2 a.m. RTY should be, it's straight up. It doesn't even consolidate. These other ones, at least, YM consolidated a little. This hasn't. So, if we get any short setups on RTY, looks like it's definitely due for a pullback. So I might be a tad bit more aggressive on RTY than I would be some of the other ones. If the setup doesn't look real good, but I know, hey, it's gone straight up since 2 a.m. I might be more tempted to take it than I would some of the other ones. It also just gives me an idea on the range. Has it been ranging all day since 6 a.m., 6 p.m. yesterday when it opened? Or oil, come up, down, it's got some movement. And gold, it's down. Come up a little bit now, but so that's all the analysis I do. I do check the news, but normally the news comes out like not during when I'm trading. 5 a.m. sometimes, like Europe, have some news, but the only thing that news really does for me is if it's going to be like FOMC, like the Fed meeting, or non-farm payroll. It tends to be pretty volatile and stuff. I'll look at it and I'll know, okay, we got news coming up. Price action is generally going to be tighter before those events. So yeah, labor too. And generally those are 8:30. So when I have a day like that, I'll be a tad bit more aggressive too, because for whatever reason, price action tends to be a little bit tighter and a little bit less volatile, and it works better for me leading up to that, because the market makers, in my mind, they want to build up liquidity in a tight range, and they want to build up a bunch of liquidity above and below, and then they want to stomp it. They want to push it up, push it down, push it up, and steal all this liquidity. That's their opportunity to do that. So in general, the way my strategy works is it's just like a rip and dip, just a quick rip and a dip. If price trends, if price goes up quick and keeps going up, that's not for me. I'm not a trend trader. I want it to rip and dip. So choppy price action is what works best for my trading. And the markets typically only trade 2 days a week, really. So it's better to have, I think, not better, but in a way, trend traders make more money, but sometimes. But it's nice to have a strategy that works in chop. So when there's news coming up, it tends to chop a little more before the news. a little more indecisive, and I like it. Okay, good question, holy moly. Question is, do you think you can trade many strategies in the beginning, or better to focus on one? And it's a simple answer. Better to focus on one. And you're going to learn so much more. I was thinking about it today because I was talking with the other guy, Coffee, there. You seen him in the chat. He's an old guy. He's like 50 something years old. His dad taught him how to trade, so he's been doing this a long, long time. And we were chatting there the other day. And I was thinking, if there was a trader, even a new one, I've developed a strategy, and if the strategy just didn't even work, if it was like an RSI strategy or a trend line thing, trend lines can work, but a simple trend line with RSI and together, or just something silly like that. If a trader built a strategy and they just traded that for a year, I know it seems crazy, but they just made some rules and they traded that strategy for a year, not with real money, but they just stuck to it no matter what, even if it doesn't work, even if it's not a profitable strategy, even if they just stuck, they made some rules and they stuck with those rules, winning or losing. The rules are the rules. Your job is to trade, or your job isn't to make money. That's the idea. That person would be better off after a year because they could move on and they'd have the discipline and the screen time and the mental capacity to trade. So, yeah, I think sticking with one thing is good, but the problem is finding which one do you want to stick with. Which one do you want to put a bunch of time into? And that's the hard part. But generally, what you're going to want is something more structured in the beginning. Now, what that means is different to everybody, but yeah, generally something more structured and rule based is what you want. So you know what you have to do, basically. And then once you get more screen time, you get better at doing what you know you have to do, if that makes sense. That's good. That's a long time. Over a year. Yeah, you just need screen time. So I was talking with Coffee about this too. You wanted to make something that was structured, or people could, take a trade and know, hey, I lost that trade, but I did what I was supposed to do, and I didn't do anything wrong. It was just a losing trade. They happen. So that's what he said you wanted to make, and that's kind of what I do too. It's like if you look at my trade setups and my trade plan, you could just, if you had the indicators, all it's a problem, but you could just essentially trade it and follow the rules. And if that was your only goal, was to just follow the rules, eventually you would just get so much screen time, you would know a setup would come. You go, no, that's not right. If it matches all the rules, but that's just not the price action that works because I have so much screen time. I know just from looking that doesn't feel right. Same thing on the other side. Kind of a shitty setup will come. First one for me is high potential for exhaustion, but sometimes I take trades that really don't have a high potential for exhaustion. But I've just learned over time, just the way the price action looks, even if they just kind of range for a bit and they pop out of that range, there's a good chance they'll kind of come back into that range for me and I can get a couple of ticks. So, yeah, sticking with one thing is the best. Maybe learning about other strategies, but not too much. But the problem is what strategy depends on your life, depends on your work schedule, Depends on your personality. I can't do I can't do swing trading. I can't be in a trade for a week. I can't be in a trade for 3 days. It is way too much. At least not with a main strategy or with a lot of money. Now I do kind of a little bit of swing trades there. I have a different strategy, but it is just not. It's not fun. I look at it way too much. I hate seeing it go into profit, out of profit, into profit. Like it's just like I can't do anything else in life but think and want to look at that. So for me, as a main strategy, I cannot do long trades. I think you know some of my trades are just a couple of seconds even what I do. So this works. What I got works perfect for me. It's structured. The trades happen quick. They resolve real quick. You're in, you're out. Sometimes a second, sometimes 2-3 minutes, but you get it over with. Rip the band-aid off kind of thing. But for these like swing trades, I can't hold for a day, 2 days. It's just not for me. It doesn't suit my personality, and I learned that. I learned that by just trying things.